Good evening and welcome back to Be Rich. Today I want to talk about another deal which Goldman Sachs did. In fact, this deal was very unlike Goldman Sachs. Goldman Sachs is an investment banker which puts together financing for leveraged buyouts. What is a leveraged buyout? Suppose an equity fund, private equity fund, wants to buy a publicly listed company and take it private. The investment banker for a small amount of equity put out by the private equity fund organizes a huge amount of debt, and this debt is sold down to other investors, and the private equity funds uses the profits from the cash flow of the acquired company to pay down the debt over a period of time, thus making it very profitable. When money was cheap and liquidity was abundant and the central bankers of the world were printing like there is no tomorrow, such deals looked very nice. In fact, there were a lot of deals which could not go wrong. The last big deal was the leverage buyout of Boots that went wrong. Later, another company took that, swallowed the pharmacy maker, turned it around, and has put it in the market now, where Isha Brothers and Reliance were competing to buy it out, which I discussed in a previous podcast. Here is another case. England is a case known for its shopkeepers and its supermarkets. There is a big supermarket chain which is concentrated only in England called the Morrisons. The Morrisons has a hoary past, started by the Morrisons family nearly 100 years ago. This company was built up by Sir Ken Morrison. He took a few stalls set up by his father for retailing in northern England and made it into full-fledged supermarkets. He did not stop there. He expanded all over the United Kingdom and made it into a powerful force. A decade or two later, in the 1960s, he listed these stocks and the company became a publicly traded stock. This company also grew by acquisition. They acquired a very famous English brand called Safeway. Over a period of time, this had become a strong company. But the shares of this company were languishing. And so since the family had exited, there was not a major owner, and this company was a target. A company called CD&R a private equity from the US decided to take this company in. There's another company called Fortis, which was backed by the SoftBank group, which also wanted to take over this company. The idea of the Fortis group was to pledge the real estate loans assets of this group and raise money against it. Whereas this company, private equity company, just wanted to take loans, neat loans, and buy this company, use the profits to pay the cash flow. The rule was the same, only the financing methods were different. And this was just before the COVID, and there was a free and bidding war between these two companies. The only people to gain were the existing shareholders of Morrisons. What started with a few billion pounds, of 3 to 4 billion pounds, the bidding war made sure the price would go up to $10 billion pounds. So finally, CD&R outbid Fortis by bidding 10 billion pounds for this company. The idea was their company would put a sliver of equity and the balance 6 billion pounds approximately would be got ready by Goldman Sachs, the investment banker. The Goldman Sachs fixed the top rate, rack rate, at 5.5% for these bonds, and CD&R agreed. The idea normally what works in these kind of deals is the underwriter underwrites the loan and then sells it to a select group of buyout specialists who take the loan, and the Goldman Sachs and the other underwriters make up the profits. Why do underwriters do it? In an era of easy liquidity and loose monetary policies, this is too good to let go because money is freely available. All these loans are sold out at a rate lesser than what they originally promised the takeover equity to the private equity company, and the margin is to be eaten by Goldman Sachs and other other financiers. This loan of nearly $6 billion was to be financed by Goldman Sachs and two other bankers. Unfortunately, the company's projections were based on results before the COVID era. Post-COVID, in a period of new high inflation, the profitability of this Morrison stock dropped very fast, thus making sure that these bonds were not attractive. Even the Goldman Sachs and the other two bankers decided to do a pre-market offer where they wanted to sell some of their stocks to some of their stock of loans to some select investors. Word got around and the price of these bonds dropped to 80 because the high inflation both in UK and US meant that the credit conditions turned and interest rates demanded shot up through the roof. Therefore, people demanded a higher price for the risk they were taking. So Goldman Sachs could not do anything. To a sliver of the loan up to $1.2 billion was sold in Asia through various of it through lenders in Asia using Goldman Sachs network. Analysts warn that that route has been exhausted. But already the 200 million pounds has been lost by Goldman Sachs. At this point of time, instead of allowing those three bankers to carry the can, other bankers got greedy thinking Goldman Sachs was making too much money. They got into the act and 12 other bankers decided to get into the pool. So Goldman Sachs gladly shared the pool with 12 other people, all of them carrying about 8 to 9%. Now, what has happened is the balance 4.5 billion that has to be placed is not being able to be placed, and the market is asking for a higher premium. If Goldman Sachs and other people decide to sell the bonds at current prices, then they land up with a loss of another 400 million pounds. So, on a 6 billion pound loan, they would have lost 600 million pounds. That is, they have lost 10% of the capital. This is today. If they delay selling this loan, what would happen is if the Fed and the Bank of England tighten, the loan rates demanded would go up further and the losses will pile up. This is very unlike Goldman Sachs, and some of them called it un-Goldman like behavior. But greed does not spare anybody, and Goldman Sachs is stuck with the Morrison's loan. This is a good lesson to all of us that when equity conditions are very good, equity is abundant, liquidity is huge, we should not indulge in reckless borrowing to do acquisitions. Across the world, anybody who does this is in serious trouble. Thank you for watching. Be rich. If you like this content, kindly hit the like button, press the subscribe button and turn on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. Once again, I thank you for your support to Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.